Welcome to TradeTheMBI.com. This is John's Reports for the 24th of October, and here we have it. We've been seeing from our DOC readings here where we have our red, long-term buyers, green, midterm, and our short-term buyers. Coming up here, they made an extensive move, backed off. Now, what that gave us, though, was a turnaround, and it doesn't look like much. It looks like just a straight consolidation here, but what we're actually seeing is activation. Buyers stepping into the market at this particular point. Now, this buy signal, when our orange, which is a ratio derivative that lets us know when we have significant activity, it is moved out of the malaise zone. This malaise zone is being caught between the cyan color and this red color, and we pretty much stayed in between there, and that pretty much left us with nothing. Normally, that would be a continuation move, which would be negative to the bias with the cyan above. If the red were above, it'd be just the opposite, it'd be bullish. That happened back over here, and that led to new highs at the market at that particular point. Now, in this particular case, we see the orange is breaking above the cyan. That puts us out of that zone. We should see a bit more of an uptake to here. I'm looking for at least us to get to that 2154 range from where we're at. We're not overbought. Minus 15 on the extreme histogram means that there are enough buyers in here to overwhelm any short positions. So from that standpoint, it's still relatively bullish. I know we've been seeing some ranges. That's to be expected, especially leading up to the election. And even after the election, though, we're still expecting, regardless of who wins, upside movement. The question is going to be whether there's going to be any, not necessarily correction as much as just adjustment back and forth as far as predominantly. Obviously, there's a huge difference between the two candidates as to which stocks would improve. I mean, obviously, you'd be looking at energies and coal and those kinds of things in a Trump win. Hillary, obviously, financials are going to do pretty well because they're going to be having a field day with what they want as far as policy. So all different approaches. I don't make any determinations as far as that goes. I think we just clearly see that very different viewpoints on how to approach these things. Now, the NQ looks to be strongest to make the move. Now, it's actually had a bit more of a reset of the short-term buyers, so the potential of a move up here of short-term buyers could really produce significant press towards new highs. It wouldn't take very much. We're still negative on the shakeout, and it's a little bit troubling because normally when you get up to this point and you start usually a little bit of a retrace, we're actually below the yellow line here. We may see a little more weakness. Now, that could even out the disparity where the NASDAQ is performing a bit better than the Dow and or the S&P, but I would be looking for a little more activity out of the S&P to catch up to it, but this is a little warning sign to be careful of. In no way is it overbought or anything at this particular point. So, and again, the 48.96 would be the upside press from there. And then from a Dow standpoint, this is looking at ETF version of just the regular Dow Industrials, not the futures. Strong move. As I was saying, strong move of the orange breaking above. Now, the fact that that's going to eclipse the steel, it should present a decent turnaround. The real issue becomes here a continuation of the steel below the cyan would be a bit more weakness. I've already had midterm buyers trail off, and we've already gone flat with the longer-term buyers, and you can see that evidenced by the shakeout. And we've actually moved to that negative 13.5. We want to be inside negative 12 for bullish place, so very unusual that we're seeing almost equivalently would be a very weak signal from the Dow, and that it may even have additional problems, which goes counter to our general view. And some of that, though, is related to this drop-off of the euro. A lot of those Dow Industrials have significant exposure to European and or global currencies, and this kind of a significant decline. I mean, we were just at 113 at the beginning of the month, and to have it collapse within this month's period is a significant blow to earnings, at least from a conversion rate. And so that does have an impact. And you can see this is what I was talking about with the orange stuck in between a range, and it usually leads to a continuation. So when we see it creating a sideways move, as it was on the ES and that, very bullish from that standpoint. So as long as this orange is stuck between these two, we should look for more continuation. I was talking about the potential to 106. I know that sounded outrageous when I was talking about it up here at the 112, 113, but we're getting closer. Obviously, the first benchmark was right around this 107 range, which is the bottom side of this range bars that we've had in for, all the way back to before the year began. So pretty much the projections in the euro have been spot on. I know it's been counter to what some people thought would happen. Bond's still going to be under pressure. Did produce the beginnings of what would be a buy signal, but you can see it popped up above, and no steel dip below our 7.5. There's no activation of strength within this buy setup, and so we would expect it to fail well below that 134 short line on the ABM. Advanced baseline matrix, which is the ABM, and here we go. USO, that's a clear one. You see that should actually produce some nice pop effect, but you can see very low here from the short-term buyers. Normally you would see this type of move with the steel all the way up here, indicating that short-term buyers have really applied into anything. So this has mostly been larger, bigger players trying to hold and elevate this. We're not seeing any activity from short-term buyers at this point. We gotten partially overbought right there as we turned yellow on the extreme histogram. And usually it's still a brief little step back, but you can see we're starting to make lower readings on the shakeout. Yeah, it's a little bit of a concern. Easy enough to play it off the ABM values, though. Below the 1137, you would want to be short, and above it, then you can maintain where this position is going, as it should result in a continuation climb. And here we go, same buy signal, producing the same thing, but the big difference here is for gold. You've had a huge influx of short-term buyers that kept all this consolidation as they were accumulating into it, and then that led to the explosion. Still hasn't produced a buy signal until this steel comes below 7.5, and we have the rising orange, but we can see a big improvement from the shakeout. I mean, we were, what was this? Gosh, it was in the minus mid-30s. Minus 35 range. We're still at minus 20, which you've got to get to this rose-colored line here at negative 13.5 before we're at that point where we're expecting, significant improvement, at least from a range of positive move, meaning something that has a substantial run capability. Earlier on our 5K, here it was, the orange dipping below, we had the steel above, and then when the steel finally dips below, produced the buy signal. It produced a secondary one, which was higher up and actually breaking into a new zone at the same time with the red, which was interesting because it puts in a nice buy, and then you had one bar that dropped, but after that it was just straight up from there. And then you saw the breakout here of the azure lines and the blue starting to go up, and that's a continuation in the trend. And you can see where it flattened out was right about here and went into neutral, even though we were starting to see a little bit of a rise here. It was gone into neutral mode, and the shakeout took over because it was in the positive zone, and that's what's led to where things are currently at, which is cyan below red, bullish. No other way around it. We had some positive extremes at the beginning of that. They were backfilled in this little flattening area, and then really decent readings from the extreme histogram all the way through there. So nice and clean. No objections to anything that's going on there. This happens to be, which program is this? The Bicel D, I believe. Test 2, yeah, the original Test 2. Before making the alterations, utilizing this. And with Amy having, some pneumonia issues and that, I've been a little bit behind on my program, but I'm hoping in this coming week that we're going to get a lot more activity on some of those things, so I'm looking forward to that. As always, though, I will be looking on the Skype chat, putting up things. We've just had kind of insignificant behavior, and we've just been waiting. I think now we're going to start in this coming new week with 17 plus days. Polls are going to be more accurate, and I think the definitive idea, barring any shocking revelations, but even though that we've had plenty of shocking revelations, really hasn't changed anything in the polls. So we'll see if there's any impact with that. Otherwise, I would expect that we're just going to see our continued move. Assuming that we don't have any more saber rattling with war issues, that always throws monkey wrench into things because it's a little unpredicted. As always, trade well. We'll talk again later.